Despite Friday's lower close, U.S. natural gas prices surged higher on Monday, supported by forecasts for increased demand next week, a decrease in output, and a bullish increase in the amount of gas flowing to LNG export plants due to the return to near full service of Freeport LNG's plant in Texas. It seems that the price rally is not being driven by weather forecasts, as meteorologists have projected that weather across the U.S. will remain mostly near normal through May 28, except for some warmer than normal days from May 18 to 22. But what is important is that market speculators are starting to switch their futures and options positions on the New York Mercantile and Intercontinental exchanges from net short to net long for the first time since mid-January. Analysts forecast gas demand in the U.S., including exports, would rise from 92.1 billion cubic feet per day this week to 92.9 next week. Also, gas flows to the 7 big U.S. LNG export plants rose from an average of 11.9 billion cubic feet per day in April to 12.7 so far in May, with the return of the 2.1 billion cubic feet per day Freeport plant in Texas. At the same time, gas output has fallen to an average of 97.2 billion cubic feet per day so far in May, down from 98.1 in April. Finally, the next 4 storage reports are projected to be smaller than usual, with a bullish projection of 36 billion cubic feet below the 5-year average. The short-term outlook for the market remains positive, buoyed by decreased production, robust LNG export demand, and strategic supply management by major producers. Although natural gas futures could face further buying pressure, we could see sellers return on a test of the 200-day moving average at $2.40, which controls the intermediate trend. If this resistance fails, then look for buying to possibly extend into $2.50. Any pullbacks, particularly if prices dip toward the $2.30 support, will represent buying opportunities, with even more buyers likely entering the market at $2.20. Nevertheless, the significant volumes of gas in storage present a risk of price suppression unless countered by sustained high demand or additional production cuts. Thank you for watching. Please like and comment to support the channel. See you in the next one.